Hello, my name is Dipen Shah and I bring this video on behalf of STAYVAN Small Cases, and I'm a SEBI registered research analyst. Having said that, let us understand that what are SEBI disclaimers for this video, and then accordingly we can move ahead with the information that I wish to provide on this video. First of all, being SEBI registered research analyst and having NISM certificate does not guarantee you profits in any manner. Investments in equity markets are all subject to market risk, and you are recommended to seek your investment financial advisor's guidance before investing into the markets. To move ahead, all our terms and conditions along with disclaimers are available on our website www.stayvan.com. So before availing our services, you are requested to please go ahead, explore our website and understand all our terms and conditions and disclaimers before subscribing to our services. Having said that and got the disclaimers out of the way, let us understand that today I am going to talk about SUBH STAYVAN, which is one of our small cases listed on the small case platform. Let us understand first of all that what is actually a small case platform. See, in simple terms, what happens is that if you wish to make your investments into the markets, in equity markets or commodities, and you would obviously want professional research to kind of guide you on which segments you should invest, which stock you should buy, what levels you should buy. So all those research services are provided by a SEBI registered research analyst. Now there are different sources. You could go to any search engine and understand and research about a research analyst, or you could seek references from your friends, family and all those stuff. But small case is a comprehensive platform which provides all the research analysts, all the investments advisors as much as possible on a single platform. You have the opportunity to shortlist them on the parameters that you would have decided for your investments. Those parameters could be a lot different. You could talk about the philosophy of the research analyst. You could kind of filter them on the basis of the frequency of the rebalances. You could filter them on the basis of what sectors they invest in, and so forth and so forth. So there are a lot of parameters that you could filter them and select the research analyst that you think you would be able to kind of gel with and understand the psychology, or have both common parameters, and on that basis you could make your investments. So small case is a beautiful platform in that manner. And also one more major advantage the small cases gives you is the B part, that is the execution part. So if you've done a selection of a research analyst and have gone and decided I had to source the services and get it executed into the market, small case does is prepares all the orders and pushes on to your broker platform. All you have to do is reevaluate the order, reconfirm that you would wish to make the investment, and the orders go through your broker platform, and the funds go out of your bank account, the stocks come to your demat account. So all this process is simplified, your investments is simplified by small cases, and that is why a lot of love is received from many subscribers to the small case platform. And small case is one of the leaders in terms of such platforms in the industry. Having said that, we are also one of the research analysts listed on small case platform. Our name is STAYVAN small cases, and one of our small case, that is one of our stock portfolio. They are individual stocks, but just because they are clubbed together, we call it a stock portfolio. One of our stock portfolio or small case is called SUBH small case. Now, how different are we from other small cases, and how different is our strategy from other small cases? That is what we would want to disclose and explain it in this video. First of all, in SUBH small cases, all the stocks that are available for investments would be having the price above 1,000 rupees. That is the current market price of that stock would be, whenever it is considered for investment, would be above 1,000. So all the stocks that are decided could be from different market caps. They could be from small cap, large cap, mid cap. They could be from any category, A category, B category. So there are a lot of parameters that go into selection of that stock. But one of the major criteria of selecting the stock for SUBH STAYVAN would be that the market price of it has to be above 1,000. Why above 1,000 is that it has a lot of lesser liquidity compared to a small price stock, but the value generation could be higher, the value that it generates, because we've seen that more of MNC stocks are usually priced about 1,000, and it gives more value over longer period of time. So that is one of the parameters that we judge the stock on. And having said that, we also give recommendations or rebalances basis on our unique SIP approach. Now let us understand that once the stock is selected above 1,000 rupees, what is so unique about our SIP that you have not seen earlier, or you don't practice it earlier, and you should go ahead and subscribe to STAYVAN Small Cases. So let us understand the concept of SIP first. The concept of SIP is called systematic investment plan. Now I'm sure everybody has that systematic investment plan going on with a mutual fund on a monthly basis. Now, because that is a common practice, I would wish to take that example head in hand. Hypothetically, say for example, you are investing 5,000 rupees in a monthly SIP on every 5th month in a ABC mutual fund having an NAV at 100 rupees. So what happens is that once you are investing, say on 5th of January at 100 rupees, your investment is bought, or your NAV or your units are bought at 100 rupees market price. Now on the 5th of February, that is the second month when you invest, and if the NAV price is 110, your units are bought at 110 price. Now the third month, that is on 5th of March when you go to invest, and if the NAV price is 120 rupees, it will again buy at 120 rupees. So if the market is going up, your cost of average is also going up. Ideally, you would want an SIP to bring the cost of average down. Now here what is happening is then when the markets are going up, your cost of average is also going up. So STAYVAN SIP addresses this problem first. What happens is that once we are recommending you to invest in a stock which is, say, priced at 100 rupees, the next investment or the next purchase will only happen at a price that is below 100. So it might happen at 95, it might happen at 90. That would depend on our parameters and recommendations that we send. But one thing is for sure, that it will happen below 100. So what happens is that your average purchase price will always be going lower rather than going higher. We would never send a recommendation asking you to buy at a price that is above your previous purchase price. So as I mentioned, if 100 is your previous purchase price, the stock recommendation would always come at a price that is below 100. Now what happens is that if the price of the particular stock has to reach 90 or 95, it can happen the next day also, or it can happen after 6 months. So STAYVAN SIP will wait for the time period and will wait patiently for you to invest at a price lesser than your previous purchase to bring the cost of your purchase down or holdings down. Because the lower your purchase, the higher opportunity that, or the higher profits that you can generate when the markets go up, or when the sell you make. So obviously our purpose is to bring the cost of averaging or the cost of purchase down. This is what we try to achieve by buying at a lesser time frame. Now what happens is that, assuming that on every 5th year funds are getting deployed into the market, and STAYVAN SIP is recommending you to wait for the prices to come down to buy. So in that period, what we do is that we ask or recommend you to park your funds within the same small case in equity, liquid Bs, or in mutual fund ETFs. It can happen in also gold Bs, Nifty Bs, or whichever instruments we think have a lesser volatility and would kind of give the cushion to your money. Why is this done? First, it adds diversification to your small case. So for example, when the equity markets are not performing, the gold, silver, or the liquid Bs will try to kind of give you a little bit of returns from the market. Second most important thing is that, assuming that the markets are falling and you would wish to invest in the market because the markets are falling, that is what is our philosophy. Now at that point, you don't have funds with you to invest in the markets and the opportunity would go by. So at that time, what we do is that, just because already the funds are sourced and they are parking liquid Bs or other instruments, those funds get liquidated or sold from there and are invested in the equity markets whenever the opportunity arises. So by our calculation or by our methodology, hypothetically, there would never be an opportunity that would go down wasted or missed, because there are always funds available in liquid funds, and we could always liquidate that liquid funds and park onto equity funds when the opportunity to buy arises. So I hope I'll give you a very practical example. Now, if you bought something at 100 rupees and the next buy is at 90 rupees and the level has come to 90 rupees, we've sent a rebalance for you to buy at 90 rupees and you don't have the funds. So at that time, you would automatically sell liquid fees and make your purchase and recommend you to purchase at 90 rupees. So you don't need additional funds at that particular point of time, but still you can take opportunity or advantage of the opportunity that is presented itself to buy something at a lower price, and we can fulfill the execution that we require. The third most important point, or the third most unique thing that we do in our SIP, in STAYVAN SIP, is that when the purchases have happened at a lower curve, that is from 100 then 90 then 80, we also make sure to book profit when the prices are going up. Say for example, you bought something at a lower level, and when the prices are going up, we would also recommend you to book profit, so that whenever the markets are again falling, you have the opportunity of the liquid funds with you because you book profit and you can re-enter the market at a lower level. So the cycle of the market or the prices of the market going up and down, you can take advantage of getting into the market and booking profit at a level recommended by us, and then again re-entering the market when the prices goes down. So this is a very unique concept that we have introduced into the markets. Now, why do you need our services? Because that when this cycle is going on of the market or the price is going up and going down, at that time our services will send you the rebalances to undertake those buy and sell when the markets are going up and going down. So we are going to actually track the markets for you and actually send the rebalances for you. When the markets are going up, please sell and book profits. When the markets are going down, please liquidate liquid fees and enter the market, because now it is the time to get your cost of average down. So these are the factors that are controllables, what we call is controllable. So you can control all these factors: when to buy into the market, what stock to buy into the market, how much to buy into the market, and leave the returns to the market, because SEBI clearly states that there is nothing that is assured in equity markets, and we also believe that there is nothing assured in the equity markets. We can control the controllables of, as I explained, and allow the markets to give you the returns, or the returns to be generated from the markets. The returns could be anything that the markets wishes to give, and we are ready to take it with open hands. So let us understand now, after having said that, why it is important for you to subscribe to our STAYVAN small cases, especially the SUBH small cases, because that as I mentioned, that it is a unique strategy. It has good stocks which are priced above 100 rupees, and most importantly, you get the best of services that STAYVAN presents. So if there is any clarity that you require during your subscription period, then you would get it from us. So the services that we offer are also a part of the subscription that you take. And most importantly, this video will help you in deciding that which small case you should select, what is the parameters that you can kind of shortlist our small case and subscribe to a small case. Whether you are already subscribed, you can understand what is the philosophy that we work on. If you are thinking of subscribing our small cases or shortlisted our small cases, then this is the strategy that we shall adopt, so it will make it easier for you to subscribe. And if you are looking forward to renewation of subscription, it is very important, because that is the time that we shall be able to communicate to you in form of rebalances if you have active subscription. So I hope that you would have understood the video, and I hope I would have made justice to your time by giving my explanation and able to justify the explanation part of this video in my simple language. And if there are still any doubts that you have, you could obviously comment us on our comment section, and we shall be more than glad to contact you and kind of reply to your questions on the comment section. You can get in touch with us in any social media platforms, and request you to please forward this video to as many people as you can, and subscribe to our channel, because we shall keep on uploading such informative videos, and you would get the first hand information from that. And please subscribe to STAYVAN small cases in large number, and looking forward to see you in another video. Thank you very much. Once again, my name is Dipen Shah, and I have bought this video on behalf of STAYVAN small cases. Thank you.